Morning or good afternoon, depending on what time zone you're in, and welcome, excuse me, to the State of the Nation COVID-19, the economic impact of the coronavirus. First, a couple little housekeeping items. We have hundreds of participants on the webinar today, so we're going to keep everyone in a listen-only mode so that none of the background noise will interfere with the conversation. But we do absolutely want to encourage questions. There's obviously lots of concern and questions surrounding the economy and everything that the coronavirus has impacted. So we want to encourage you to ask questions. We're going to take the questions at the end of the presentation. So on your dashboard, there should be a little Q&A function. Go ahead and post your questions throughout the presentation as you think of them. And then we'll read them off and Mr. Nevin can address those after the presentation. So please post questions as they come up. There will be a recording available. So after this presentation, about an hour or two after, you'll get an email with a link to the recording if you want to listen to it again. And there will be a copy of the PowerPoint presentation and another article that Mr. Nevin has written that you'll be able to download when you get the confirmation email after the webinar as well. First, the purpose of the webinar is really our intention to provide quality educational material and information so investors and their advisors, can make better informed real estate investment decisions. There's just so much uncertainty and so many questions out there surrounding the effect of the coronavirus. So we thought this would be a very timely topic and how it would impact the economy and the real estate. So we hope this presentation will provide some guidance for you all. We have been receiving a lot of questions, obviously, that surround 1031 exchange transactions. So I quickly wanted to kind of address the ones that are more common. So those who are clients are, asking, are we up and running, or do we have any concerns? And so we just wanted to let you know we are fully operational. We actually activated our business continuity and disaster recovery plan that we put in place back in 2005. We activated that over a month ago, so well before the actual lockdown, if you will. And our entire team is working from home. So all of our 1031 exchange specialists and our trust specialists have been working from home. So they're safe and sound and we're fully operational. We've actually always provided 24/7 access and have always been ready for some kind of eventuality like the coronavirus. We're getting a lot of questions as to the state of the 1031 exchange industry, how safe are qualified intermediaries. Those are excellent questions because when there's challenges in the economy like we have today, that's when companies that aren't quite as strong may not survive. So the critical things we think are looking at government oversight. We're one of the few exchange companies that has any kind of government oversight. Less than 1% of qualified intermediaries actually have any kind of government oversight or regulation. And we spent a number of years going through the regulatory approval process to get Exeter Trust Company licensed, regulated, and audited by the Wyoming Division of Banking. So we actually fall into the Division of Banking now. And you want to look at the usual institution or bonding and insurance. So we have a financial institution bond package that covers fidelity bond, which is crime insurance, errors and omissions if we goof, and general fiduciary insurance coverage. You want to look at the equity capital. So we have significant equity capital that'll hold us through a number of years if this turns out to be a really rough run. And we offer every client separate, segregated, dual signature qualified trust accounts. Probably the biggest question on everyone's mind is, will there be an extension of the 1031 exchange deadline? So I wanted to address that real quick. First, in a normal market, to get an extension, the president has to declare a disaster. And normally it's a natural disaster, a fire, a flood, a hurricane, tornado, what have you. And then once the president declares that natural disaster, then the IRS or Treasury would issue guidance that actually explains who qualifies for the extension of time, et cetera. In this case, the president has declared the disaster under a different act. So that's what's interesting about today's situation. So we're not quite sure what that means. We were participating in a webinar last Friday where the IRS Chief Counsel was presenting. And he indicated on that webinar that the IRS is looking at all the deadlines that could possibly be extended under 7508A, and they do expect to issue guidance soon. So it didn't define that, but I think in the next couple of weeks, we're going to see something. There was nothing as of this morning. So we do expect some kind of extension. And what that would mean generally in the past is that the client's 45-day identification window would be extended by an additional 120 days. And the end of the exchange period of 180 days would also get extended for 120 days beyond that. So in theory, you could have a total of 300 days to complete your 1031 exchange. Now, this situation is different in that generally the natural disaster is a specific date occurrence, a fire on a specific date, a tornado, what have you, where in this case, we have a virus that's going over an extended period of time. So it will be interesting to see how the Treasury and the IRS respond to kind of a moving target that is not a one-day occurrence. So finally, and then I'll introduce our presenter, we're getting a lot of questions about, well, what if I'm in my 45 calendar day identification period, or I've passed my 45 calendar day identification period? What should I do? I can't leave my house to go out and find replacement property. Or the same type of question is, what if I'm approaching the end of my 180-day exchange period? Or what if I've just passed it and I wasn't able to close because of everything that's going on in the market today? So our advice would be stay pat. Don't pull your funds out of your 1031 exchange account. For example, we had a client we talked to yesterday, and his 45 days landed this last weekend on Sunday. And he said, okay, let me pull the money out on Monday. And I said, if you pull the money out, it will absolutely be triggered or taxable as of Monday. There's no way to go back and undo that. So in this case, keep the money inside of your 1031 exchange. And then when the IRS comes out with guidance, if you fall within their guidelines for that extension period, you can still proceed with the 1031 exchange. So recommended, keep your money in the exchange account, don't pull it out, wait to see what happens. Otherwise, pulling the funds out, there's no way to undo that or unring the bell, as they say. So with that, those are the most common questions we're getting. And now I'd like to turn it over to Alan. So Alan Nevin, we've known Alan for many, many years. In fact, Alan, I miss our quarterly breakfast meeting. So as soon as we get past all of this, we're gonna have to start that up again. But Alan is our Director of Economic and Market Research at Exeter Group. He has extensive background in real estate economics, lending and market analysis. He serves the development, investment, legal, and public agency communities, both residential and commercial real estate valuations, feasibility studies, real estate advisory services, etc. He also provides forensic economic services for construction and real estate litigation, and performs market studies and provides expert witness services. He holds a Master of Arts degree in statistics and research from Stanford University, a Bachelor of Arts degree in marketing, and a Master of Business Administration in real estate economics from the American University in Washington, D.C. And in 2016, he published his landmark book, The Great Divide, The True Story of America Tomorrow, which details America's demographic and economic trends and where it is leading the country for the next 25 years. So for those who haven't gotten that and read that, I highly recommend it. It's a good read. And with that, Alan, welcome, and I'll turn it over to you.
Thank you very much. Let's hope that the April showers mean May flowers. I think they will. Let's take a look at this first slide, because people saying, is this a repeat of 1929? And the answer is, it is nowhere near it. Back in 1929, of all of our employment, 39% was in manufacturing. And when manufacturing shut down, basically, the economy shut down. Today, only 9% of our employment is manufacturing. And therefore, if it were to shut down, and it has not, it won't be anywhere near as devastating as in the past. Also, government employment is now 15% of total jobs versus 10% back in 1929. So the thought of a 1929 recession is a little far-fetched. It's not going to happen. Next slide, Bill, if you will. Take a look at this getting a little closer to today's history and go back to the recession that we had in 2008. The unemployment rate in December of 08 was 6.8%. As of the March numbers, which just came out from Bureau of Labor Statistics, unemployment rate was only 4.4%. That's up from about 3.6 the month before, but still 4.4 is not a tragedy. What has gone up dramatically is the initial claims for monthly unemployment, which probably in April will double that. But the amazing thing is that they're still advertising 7 million jobs that are available and have not been filled. Now, let's look at interest rates and the comparison between 08 and today. 10-year T-bill, which sets the rate for mortgages. Typically, mortgage rates are 2% over the 10-year T-bill. Well, back in 08, it was at 4.7, and today it's effectively zero, as is the federal funds rate. And when we look at the mortgage rates, we're basically about half of what it was in 2008. And also with the 15-year rate, we're below 3%. And there are a lot of lenders out there who give loans out now with no closing costs and no points because they are awash in money. One of the things that's been happening is with interest rates effectively zero in many parts of the world, they are sending their money to America to get our even low rates, which are still better than zero, or I don't know how you do less than zero, but effectively it's zero in most of the world today. And these banks, the lending institution, are washing money, and they've got to get it out. And they're doing that through lines of credit, through refis, and through loan originations on new projects. So we've got plenty of money, and they're going to get it out. They're not going to do silly things like they did in 2008 with liar loans, because Dodd-Frank sort of took care of that. But still, they want to get the money out. Their big problem right now is getting it out during COVID-19, because they just don't have enough people on hand to make everything happen. When we look at real estate foreclosures, in 2008, we had 2.3 million foreclosures. And in the last year, we only had 1/4 that many. And I just look at the recent numbers, and the foreclosures haven't gone up at all. Existing home sales are really pretty good. I will talk about that in a little bit later, but we're doing okay. So when we look at the unemployment rate at 4.4%, we had a job loss last month of 700,000 jobs, but you have to look at that in terms of the fact that we have over 150 million jobs in this country of folks who are employed today. And that isn't really what I would call a terrible situation. We're doing pretty good. Now, let's take a look at COVID-19 and what's happening around the world. You just can't look at hard numbers. You have to have a basis for comparison. So I like to look at deaths per million population. China basically only had 2. They're pretty much back in business now. Germany only had 19 per million, and we're at 29, which is still quite good per million. And then you can go down the line and see that the really big hurt has been in the EU countries, including United Kingdom, where they've had an enormous amount, primarily because of not following the social distancing rules. I also know, in talking with a friend from Madrid, that the numbers for Spain are wildly understated. And the other countries have been pretty good about producing honest numbers. We know that the deaths today have gone up somewhat, and I track it every day. Johns Hopkins has if you go on Johns Hopkins viral map, they will show you everywhere in the world and what's happening in terms of the COVID-19. In the next slide, we can talk about what's happening here in the States. It's somewhat amazing to me that almost half of all the deaths that have occurred have been in the greater New York, New Jersey metropolitan area. I don't think we've ever experienced anything like that. Virtually all the other areas have, if not small, at least manageable number of deaths. LA Metro, which has 20 million people in it, only has had 200 deaths so far, and that includes LA, Ventura, Riverside, San Bernardino, Orange, and San Diego counties. And then Northern California has only had 89, and that's a 9-county area that starts up in far north Sonoma, goes all the way down to Santa Clara, and then east through Costa Contra and Alameda counties. And they've been social distancing very successfully. So 55% of all of the deaths so far have been in a relatively few metropolitan areas. And you can see Chicago, at least using Cook County and DuPage County, has only 204 so far. So it's bad, but it's not a tragedy. Let's go to the next slide, if you will. The national numbers on what's happening in the world of real estate are not out yet. It's very difficult to gather all those numbers. But as an example, the San Diego Association of Realtors has completed their March numbers. And I'm delighted to say that the month of March and the year to date have been rather good. And in terms of March 20 versus March 19, virtually no change in the number of home closings. And I find that to be a very positive thing. And I trust the other metropolitan areas around the country will have a similar experience for the month of March. Let's go take a look at the next one, Bill. In San Diego, the home prices continue to go up on both single family and attached for sale housing. And that's a very nice sign too. Let's go to the next one, which is, okay.
I think we lost a couple of slides there.
I think so. I know there's.
Let me see if we can do a quicker.
I can talk my way through them because I have them memorized. But the interesting thing, when you look at the inventory of housing for sale, it is amazingly low. You know, in most metropolitan areas, you typically have a 6-month inventory of homes for sale. In San Diego County, we're barely at 1.5 months, and the number of homes that are open for sale has just deteriorated very dramatically because people who have decided they don't want people tramping through their homes. A lot of them are just having open house after you put in an offer. So the situation here in San Diego is really interesting. And the question is, what happens in the merry month of May when things somewhat come back to normal? And the answer is, I think there's going to be a rather major surge of folks who come out of the woodwork to buy. And I think prices, some people have been saying prices are going to deteriorate on homes. I say the opposite. I think they're going to go up again because there are going to be a lot more people out there looking than there are available homes. On the new home side of things, from a result of a phone call I was on recently with 25 builders around the country, it seems that they are moving forward in their construction and that sales continue to go on, which is really sort of interesting. Here in San Diego County, our new home projects, for the most part, are open, but you have to have an appointment to come in. And that's creating a built-up demand that I think when things open up will dramatically open up the doors. One of the things that is really somewhat interesting is that the price of lumber has dropped dramatically. It's down to like $260 per thousand board feet, which is maybe half of what it was a year ago. The result of that is that it's a great time for builders to buy lumber and go to work on building homes and other low-rise apartments where lumber basically is the largest single component. So we see here in the county continuation of building, as I'm sure you see in the other parts of the country, and national sales seem to be rather good for new homes. Here in California, as I'm sure you well know, we have a perpetual shortage of inventory of homes for sale, and we have a very slim supply of new homes, and they tend to be very, very expensive. For those of you who are back east, if I tell you that the typical subdivision home cost for a finished lot is running $250,000 to $300,000, you can see why they're somewhat unaffordable. And rental rates here typically are about twice what they are in the rest of the nation. It's very, very difficult to find a modern 2-bedroom unit here for under $2,500, and most are in the $3,000 range. So new construction keeps going on, and throughout California, and from what I see, the rest of this nation is still moving very much forward with new construction, which of course will bolster the economy as things do come back. When I look at the next month in terms of unemployment and what's going on, this is an interesting situation. This is basically a virus that doesn't like warm weather. And as a result of that, 70% of all of the deaths have been north of the Mason-Dixon line, which is basically from the state of Maryland across to the California-Oregon border. And the southern states, with one or two exceptions like Louisiana, had a fairly easy time of it. And for them to bounce back will not take much. And most of the new growth in the nation is in these states south of the Mason-Dixon line. And as a result of that, you will see a very quick bounce back in their economies in the next, let's say, 30 to 60 days when things turn around. Bill, that's about all I have to say, and you are welcome to throw me some questions.
Post questions on the Q&A function in your dashboard. We go ahead and read those off. We can have Alan address those. I did have one that's kind of 1031 related, but Alan can also kick in here as well. The question was, I have listed my single family rental home that I want to exchange. Should I wait or slow down my real estate agent in trying to sell the house since I cannot easily find exchange properties?
I don't see any reason, if you're not in a particular hurry, why you wouldn't want to wait.
Now, it would seem like they could put it off so that we have more opportunity to get out and look for rental property, et cetera.
Yeah, obviously there are going to be a lot more people out looking. So, if you happen to find some bargains right now, you grab them. But I don't see a situation where there are going to be a lot of bargains out there. We haven't even begun to experience mortgage depression, if you will, with very, very relatively few foreclosure activities taking place.
Next question is, in the past 2 weeks, we've seen a significant change in real estate sales activity. And they're quoting some of the San Diego Association of Realtors MLS the data on the homepage under stats of the week. And I won't read off all the stats, but it says, so we've seen a precipitous drop in San Diego MLS of 16% for recent sales and a rather alarming 43.8% drop in pending sales. How long might one estimate this sales activity drop off might continue?
Like I said, I think the third quarter will come back to normalcy. And it's obviously some markets will return faster than others. But it's sort of interesting that in terms of people paying their mortgages and paying rent, they typically have money to pay for the April rent and mortgages. And the question is, will they have the money to pay for May? And if in fact Uncle Sam comes through with the money, as they say they will, they probably will be able to pay for May as well. So I'm not seeing any major defaults taking place.
Next question is, how will lost rents affect rental property sales?
Oh, the answer is that I don't think it'll have any effect whatsoever, because the units will, when there are vacancies, they will fill back up. But what I've learned now is that virtually all of the projects have been able to collect their rents for April. And it's just a matter of trying to guess what percent will pay for May, but I don't think that will have an effect on prices, because owners obviously realize that it's going to come back, and it will come back rather quickly for most places.
Okay, next question. It looks like the first part got cut off a little bit, but it looks like this month of April is projected slow on residential sales. Will you say it is temporary? Thank you.
Right. Yeah, I think so. It would not surprise me to see them go down in sales around the country in the month of May. There are a number of markets where they will not go down. Markets that are supply constrained. It's very likely that the sales will continue to go on.
Let's see, next question is on the 1031 exchange deadlines. It says, how likely do you think there will be an extension of the 1031 time limits? And specifically, did you say the 120 days would also be added to the 45-day selection period? The answer is I think it's very likely that they're going to come out with some kind of an extension of the deadlines, because it's completely out of the investor's control. And they've asked everyone to social distance, so you can't really leave your home to go look for a property. So I think it's very likely they're going to apply or come out with a guidance on an extension. And yes, generally the 45-day identification period is then extended by adding an additional 120 days to that. So you have 120 days plus 45 days. The difference here is that this isn't a single date occurrence. This is a viral infection that's gone over a period of months. So they may come out with a different set of guidelines with this type of an extension. We just don't know what to expect. But I think the odds of an extension are very good.
Yeah, Bill, you have to remember that President Trump is a real estate guy, and he will do everything possible to make sure that real estate stays healthy.
True. Yep, absolutely. Next question is, if so, which goes back to one of the prior questions, when is the best time to buy?
I always say anytime. But the reality is, I don't see people cutting their prices at all now. There's no reason for them to do that, because they know that, first of all, that they're not going to get foreclosed out, because they're going to be allowed a lot more leniency if they can't afford to pay their mortgage. And everybody, I think, is just going to keep their powder dry.
And certainly interest rates are basically at an all-time low. So now is the time to capture those low interest rates and take advantage of them.
Yeah, one of the things I'm seeing is that it's taking them a lot longer to close a loan. So it's another situation where you want to go into a purchase with only like a 30-day close on it, because that's most likely not going to happen in today's world.
Our neighbor, if you will, to our corporate headquarters office in San Diego is a mortgage company, and they said their pipeline is better than it has ever been before, and they just can't keep up with it. It's been just crazy. And the interesting thing too is we kind of expected our 1031 exchange volume in March to taper off somewhat. And actually March was better than February and better than last March. So we still had a really strong March in terms of transaction volume. Let's see, next question is, will increased uses of online meeting platforms affect office space demand?
That is a wonderful question. The answer is that over the longer term, it really will. But it's something that's already started. We know that a rather large percent of office workers find it very comfortable to work at home. We see the WeWork type of space expanding, where people just want a place to have a desk, and they may not need to go into a big office. I see a long-term contraction of office space. On the other hand, it is true that Americans are social animals, and they really enjoy talking to other people. I'm in an office with 40 or 50 people, and I really enjoy their company. And I don't enjoy sitting at home as much. I like the interaction, and I think the result of that is that the office market will have some cutback in the amount of square footage for individual firms, but that's over the long run. But yes, there's no question that this has had an interesting effect on the future of office space.
Next question is, what type of economic curve is Alan seeing? A U curve, a V curve, or something else?
I see V. The V being the bottom being next month, but then shooting back up in June.
So next question, it seems you don't think there will be a significant buying opportunity as a result of the pandemic based on recent data, but don't you think that forthcoming economic data will cause a large drop in home prices?
No, not at all. I don't understand why there would be a decline in home prices.
Let's see, next question is, what is the long-term effect a series of large bailouts will have on the overall economy?
Well, you say long-term bailouts, I am not exactly sure what the questioner is asking.
It looks like large bailouts. So I don't know if they're referring to the $2.2 trillion in effectively bailouts for taxpayers, airline industries, or what have you.
Um, I don't see where it has, I mean, it has a very positive effect right now, but I don't see where it has any long-term future effect, other than to obviously bring up our national debt into the 22, 23 million range, trillion range.
Next question is actually, this is a follow-up question to our conversation on the extension of 1031 exchange deadlines. And the question is, will the extension also apply to California? Generally, California follows the federal guidelines on extensions, but it's not necessarily guaranteed. So we'd have to wait and see how California responds to that. Next question is, would you suggest sellers listing now or waiting until buyers can get out to see properties again?
Oh, I don't see why you should do anything different than you do in the past. I would just wait. There's no particular hurry. I mean, unless you have a desperate seller, but that's really an insignificant percent of these sellers.
Let's see, next question. Your next question is a happy face, so they liked your answer. Would there be any qualifying criteria for the extension if an extension is granted? For example, only closings on a relinquished property prior to or after? And the answer there is probably. Normally what they would do when they grant an extension of time for the 1031 exchange is define what the disaster is and when it occurred, and any taxpayers that are either have relinquished property, replacement property located in the disaster area, or they are located in the disaster area, or their record keeping is in the disaster area, would qualify for the extension. This is different because it's kind of a nationwide viral disaster. So the question will be, how exactly will they grant an extension, and will it apply to everybody just across the board? And I don't think we'll know until we see the actual guidance. Next question, but people are losing jobs by the millions per week. This will impact their ability to receive a loan. Shouldn't this reduce demand for real estate properties? And I think that's a follow-up question to the one above about dropping in home prices.
Well, what history has shown is that folks who've lost their jobs, unfortunately, typically are hourly workers. When you look at the last recession that we had in 2008, the unemployment rate for folks with college educations was about 6%. It was really almost a blue collar recession, and that's what we're seeing right now. And those who are college educated will probably wind up here with maybe a 6%, 7% unemployment rate, which is not, it's bad, but it's not significant. The big hurt will continue to be blue collar workers who are hourly workers. And that will have, of course, a major effect on the apartment market, because that is traditionally been the bailiwick of the rental community.
Next question is thoughts on retail and office vacancy and potential rebound.
Okay, retail is a problem. When you see regional shopping centers across the country basically shut down, the answer is the big guys will survive and the little guys won't, because typically mom and pop retailers don't have a rather large backlog of funds to keep their business going, particularly those in the food business. So unless the landlords are giving them a break, it will be very, very difficult to refill those spaces, and it'll take some time. So the retail is the market that's basically being hurt the most by this virus. That and the tourism market here in San Diego County, 17% of the city's revenues come directly from tourism, and those have all but disappeared. So, but the retail space market will be hurting for some time until those spaces will be vacated and refilled. And it would be very nice if the Small Business Administration came to the rescue on some of these, but you're talking about millions of small businesses, and I don't see the SBA being able to fund that many businesses.
Next question.
Office. Yeah, office, in most cases, you have a longer term lease, and most of the office lessors and lessees will hold on, and they'll come through okay. You're not going to see a wholesale bailout of people leaving offices.
Perfect. I think that addresses the next question as well. How long could it take the US/world economy to fully recover? A couple months, a year, a few years?
Well, the European Union and Great Britain, it's going to take a lot longer there than it will here, because we really haven't been affected on a macroeconomic level like they have. Now, China and South Korea, Vietnam, Japan, they'll come back faster because they conquered the virus faster. And they are manufacturing oriented countries, and they are gearing up again, and they will be back in business in 30 to 60 days. The European Union and Great Britain are really not manufacturing centric, and a lot of their, a major part of their economies is tourism. Tourism not only from outside the EU and Great Britain, but from within the countries themselves. And that is going to be very, very slow in returning to normalcy. Plus the fact, unfortunately, the fact that they've gone through such a terrible time with the virus, that I think other countries that typically visit Europe will be hesitant to come back. I think America will be hesitant. I think America will also be hesitant to get aboard cruise ships again rather quickly. And between America and China, those are the two huge cruise markets. China has seen a situation where 20 years ago, almost nobody from China ever went out to be a tourist if they were allowed to. And now they've become, 20% of the Chinese population has been outside the country, a large part of them on cruise ships and going to Europe and to America. And I think they're going to be a little hesitant to come back into that market. So I think America and China and Japan and Vietnam and South Korea will bounce back relatively fast, much faster than the European Union and Great Britain.
Let's see, next question is, will the infusion of cheap money cause inflation on assets or consumer goods?
Great question. The answer is I don't think so. I mean, we've had cheap money now for a couple of years, really, and we've seen no evidence whatsoever that it's been inflationary. Inflation, well, it's more or less dead.
And next question is, with more employees working from home, do you feel the need for larger apartments / condominiums will be in demand if this would lead to higher rents?
Well, it's interesting. The perfect apartment is a one bedroom with a den for purposes of working at home, and there are virtually none of those available around the United States. I don't see where there's going to be any immediate change in either the type of units or in the existing units in terms of working at home. The other part of the equation is that virtually everyone today in the certainly professional world works off of a laptop as opposed to the traditional desktop models. So where they work is sort of irrelevant. They can work anywhere. And that is going to have some interesting ramifications in the rental apartment market. It's fairly interesting. We did a study that shows how many cars are left in the garage or the parking lots at 10 in the morning. And as you go up the socioeconomic scale, there are more and more cars that are still in their places at the apartments at 10 o'clock in the morning, where it's at the lower end of the scale, the blue collars are all out and going to their jobs. So there will be a lot more people, there are a lot more people who are working at home, at least part-time.
Let's see. The next question is, when exchanging a single family rental home, would you recommend, or is it best to look for a duplex or 2 townhomes versus another single family? So kind of an asset class question.
Well, the answer is that over history, and I think even true today, is that detached homes have go up in price more than attached homes. And I think that is a trend that will continue, mainly because the inventory of homes in today's world is not expanding as much for detached homes, that because of the cost of housing in most metropolitan areas, that most of the newer for sale housing is moving towards townhomes or vertical construction. So I still think that detached homes are still the gold standard.
Let's see. Next question is, if I lived in a residence for 6 years, then maintained it as a rental for the last 15 years without living there, are we still exempt from capital gains? The answer there is no. You're speaking of the 121 exclusion, which is the $250,000 in tax-free gain per person. And you have to be able to say you've lived in the property and owned the property as your primary residence for 2 out of the last 5 years. If it's been rental for the last 15 years, it would be considered investment property, and you would qualify for a 1031 exchange or other tax planning, but not the 121 exclusion. Let's see, next question is, what impact would this have on opportunity zone programs?
I thought I covered that, but Bill, you want to go to the next question?
Sure, absolutely. How the hospitality, specifically hotel industry, is impacted right now, and how you see it coming out.
Well, it's interesting because the hotels that are convention oriented, I see a massive shift of dates where events that were supposed to have been held now are just going to shift to the fall or next year. So I don't think it's business lost. I think it's business delayed. I think the normalcy will be achieved on the traditional hotel and motel industry, get back to normal, certainly within the next 60 to 90 days.
And we have 2 questions left, and then we can wrap it up. This is kind of speaking of hotels. How about flying? When do you think Americans will feel comfortable with flying again?
You know, Americans bounce back pretty quickly. I think that they'll be back in the airports rather quickly. You just can't stop moving. You just have to keep going. And Americans are very resilient. They will be back in the planes in the 60 days, certainly.
And last question is, excuse me, any idea what square foot land cost should be for multifamily dirt in East Los Angeles, i.e. Pico Rivera? Always enjoyed Mr. Nevin's articles in Tribune and Daily Transcript.
Thank you. The answer is I really don't know the answer to that one.
Gotcha. And that is all the questions we've got at this point. So thank you everyone for attending. Alan, thank you so much for presenting with us today. And if, once this webinar is wrapped up, about 2 hours afterward, you'll get an email so you can re-listen to the recorded version of that. And Alan's contact information will be in there as well. So feel free to download that. If you have any questions, his phone number is in that PowerPoint, so you can go ahead and give him a call. And on the screen is our regional offices. Feel free to reach out to our folks if you have any questions on the 1031 exchange side. And somebody had also asked, would we notify people when the deadlines were extended or when we have more information? The answer is yes. If you're on our mailing list, you will absolutely get notification as soon as we know that it's been, the guidance has been issued. So with that, thank you so much. Appreciate it. Look forward to working with everybody after we get past the next 30 to 60 days. Take care, guys.